Is SoFi going back to $30? The past 3 months have been devastating for SoFi stockholders, leaving many of us asking, what is SoFi's real valuation? And is this a buy the dip moment? Well, in today's video, we'll see exactly what CEO Anthony Noto has to say about this. I will look at what I think is a crucial level and discuss the real risk and reward opportunity of SoFi stock. And we'll discuss some other matters too and try to answer the most important question. Is SoFi stock a buy right now? So stick around until the end. Remember that I'm not a financial advisor and this is not financial advice. Now let's get straight into it with the latest official news from the company. This week, SoFi announced an enhanced partnership with MasterCard to enable SoFi USD as a settlement option across MasterCard's global payments network, meaning that card issuers and acquirers can more easily enable the millions of businesses they serve around the globe to instantly settle transactions 24 hours a day, 7 days a week. A move that SoFi CEO Anthony Noto said is only the beginning of our efforts to bring SoFi's bank-grade infrastructure to digital commerce. But Anthony Noto himself hit the headlines recently too, and I have a very mixed opinion on this matter. Anthony Noto hit the headlines for buying the stock on the open market. So first of all, we always talk about a CEO buying the stock as a huge sign of strength and belief in a company and its management team. It's also usually a sign of belief that a company is undervalued. And while I obviously don't see this as a negative, I also don't see it as a huge sign that SoFi stock is going to explode in 2026. And here's why. First of all, Anthony Noto bought $1 million worth of shares. While it's nice to see, it's also almost meaningless. This is a man whose net worth is approximately $100 million and whose SoFi salary package was about $28 million in 2024. Someone who earns $28 million in 1 year investing $1 million in a stock is the same percentage as someone earning $90,000 salary investing $3,000 in a stock. Yes, it's nice to see, but overall it doesn't change much. It doesn't change the fundamentals, and it could be seen as more of a token gesture. Even if Anthony Noto has gotten very defensive over that suggestion, stating here on X, there is only one reason I buy SoFi. It's because I think it's a great risk reward despite the concentration. I'm a blue collar kid, and no matter how much money I have, $1 million is a ton of money. And I have 1,000 other ways to spend it or use it that would be meaningful and impactful to people and organizations. Now, as SoFi investors, we had also hoped that SoFi would be included in the S&P 500 this March. But when the S&P 500 rebalancing was announced this week, they have skipped over SoFi this time around in favor of Vertiv, Lumentum, Cohort, and EchoStar, who will all be joining the S&P 500 from March 23rd. So this is a bit of a disappointment, but overall, what does it actually change? Is SoFi still a great company? Yes. Is SoFi a good long-term investment? Yes. Does it change SoFi's fundamentals? No. No, it does not. SoFi has dropped 40% since November's all-time high. This is probably the biggest factor in the decision not to include SoFi in the S&P 500 this time around. Now here is something important though. SoFi's last quarter was their best quarter ever, yet the stock is down 40% from its high. SoFi's trading around 0.76 PEG ratio with 35% Q1 revenue growth, and Anthony Noto said that he'd be incredibly disappointed if Q1 was their fastest quarter of the year. So this tells me that there will be better quarters ahead. None of us know the company better than the CEO himself. No matter what is said in the comments here, no matter what your feelings about SoFi are, you do not know more than the CEO himself. And although the stock is going in the wrong direction over the past 3 months, it has been going in the right direction for the past 3 years. January 2023, SoFi was only $4.50. Today, it's $18.50. If you bought the stock at any point since going public, then you are more than likely doing very well on SoFi stock. Let me know in the comments, where on this graph did you buy and what is your dollar cost average? Looking at the charts, we can see both how much SoFi has dropped in the past 3 months, but we can also see how far the stock has come in the past year. Just this week, we bounced off a key level that goes all the way back to 2024. Now, it's worth noting here that the only time since 2024 that we've been below this level was during the tariff panic in April last year when the entire market crashed. I think we're at a very good level right now. Over the past year, a lot of you in the comments have told me that you were hoping for a dip so that you could buy even more. Well, I'm pretty sure that this is not exactly the type of dip that you were looking for, but I'm really interested to know, have you been buying the dip or did you panic sell? I think the current price for SoFi offers a fantastic buying opportunity, but beware of one thing. The markets are still in a state of fear. Non-farm payroll fell by 92,000 in February, when growth of 50,000 was expected. The unemployment rate also rose to 4.4%, and oil prices have spiked up and they don't look like they're coming back down anytime soon. So I think that Monday could see another small drop for SoFi before we start to recover. Looking at MarketBeat, we can see that analysts are still divided on SoFi stock. Of the 18 analysts covering the stock, 8 rate this as a hold, 3 as a sell, and 7 as a buy, with a consensus price target of $26. On the upside though, out of all these price targets that go as high as $38, the very lowest is $18, which is right around the same price as we're at today. Now, this is a fantastic article on Seeking Alpha. SoFi is ready for a new leg up. SoFi ratings upgrade. SoFi is upgraded to a buy as valuation nears multi-year lows despite strong fundamentals and outlook. So if you have a paid Seeking Alpha subscription, you can read this on Seeking Alpha's site. There's a link to this in the description below. If you're not already a member, you can sign up using my referral link to get a free trial and a huge discount. That link is also in the description, or you can follow along as I go through the important points. First of all, SoFi might have dropped recently, but they are in a great position in the fintech space. User metrics are looking good, and that is successfully being translated into financial growth. The company is also well run, as their margin expansion helped to power an impressive Rule of 40 score. In the grand scheme of things, this is still a fairly young company despite being one of the pioneers of fintech. The company has come a long way, and the vast majority of their expansion has been organic. Their solutions now span from banking to crypto, and these services are now available through SoFi Plus. In my view, the company has come a long way, and a good track record in the business means a lot when evaluating the investment potential of the stock. At the end of the day, though, a fintech company is only as successful when it can attract users in a strong manner and when users use their services often. In both regards, it seems that SoFi is in a strong position. Membership growth accelerated from 2024's 34% to 2025's 35% as a signal that adoption is continuing in a strong manner. But what's even more encouraging is their product growth from 32 up to 37%. And signs of strong growth are even clearer in SoFi's financial results for 2025's Q4, where their Rule of 40 score captures the growth and profitability impressiveness as well. Most important of all is the company's valuation. While a forward PE ratio of 31 isn't the lowest in the world, it does represent one of the lowest that we have seen for SoFi over the past few years. I believe this shows that there is a considerable amount of opportunity in the stock right now. The author's final thoughts are straightforward. He has upgraded SoFi to a buy as the valuation contraction makes little sense when looking at the fundamentals and outlook of the company. The stock sell-off to start 2026 seems overdone, even if the valuation may have been a bit high late last year. Moving forward, I expect the current consolidation in SoFi to end with a new leg up. But what do you think? If you've made it all the way through the end of this video, then comment SoFi and let me know what you're doing during this dip. Are you buying more? Are you holding in the hope that things will turn around soon? Or do you fear for the current economic situation and selling SoFi stock? Drop a comment. I'm genuinely curious to hear your thoughts. And if you want more deep dives on SoFi, make sure to like the video and subscribe. Remember that I'm not a financial advisor. This is not financial advice. Thanks for watching, and I'll catch you in the next one.